Good morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Wednesday morning pre-market webcast. Okay, so we're starting to see a little bit of a rollover in the E-mini, and if you look on the daily chart, there's a doji candle from up on Friday, and the bears have been able to pick up a little bit of momentum. The gap up to 1369.5 that we had Sunday night, literally on the first tick of the market. That has been the high, and until further notice, that's going to be the high. So on my chart, this leg goes from 1195.5 to 1369.5, and if the bulls want to go ahead and keep it going, they're going to have to build some momentum. They've got to get back through 63, they've got to get through 66, and then get over 69.5 up to 1373. Now the bears are not out of the woods. And I've said this many times before, the bears have been given the ball to run with in open field on a number of times, and they either fumble it or they fall down. So we'll see what happens. They need to get through this 1356, 1357 area that they're struggling with. Yesterday, that marked the low area, and it's marked the low area in the overnight trade today. So right now, we are currently trading 1359. There's a pivot resistance zone up at 1361 to 1361.25. I expect that zone to be tested sometime during the regular trading hours this morning if the bulls can't get through that area. I suspect they probably will. I think they're going to struggle getting through 63. If they struggle getting through 63, that's the bears' chance to push it back down and try to make new lows. We talked a couple weeks ago about how the bears were never able to take out the low of the prior day. If they're going to reverse this trend, that trend reversal starts with being able to consistently make new lows each day, even if you don't close on those lows. Trading to a lower number each day is what the bears need to do to start that momentum downward. Okay? Now, make no mistake, we are absolutely in an uptrend. We are in a raging uptrend, but we're extended, and the most overused term that you hear these days is that we're due for a pullback. I mean, we are, but it'll pull back when it wants to pull back. But just know that just because it's pulling back does not mean that we're going off a cliff back to February, March of 2009. It's just not, it's just not that kind of market. We could pull back as far as the 200-day exponential moving average, which is sitting right about 1259 right now. You could pull back there, bounce off of it, and the uptrend is intact. I was telling my subscribers last night, the thing that I'm really focused on right now is the 20-day moving average and how price reacts to the 20-day exponential moving average on the E-mini. That it's going to hit sometime here, either as a function of time as the average moves up, or as a function of price as price comes down. So we bounced off the 20 on January the 30th, and we'll see how we react this time around. So that's just a few of the things I'm looking at today. Let's do support and resistance. Current trade is 59.25. So on the upside, we've got the pivot zone up at 61, then 1366, 1369.5, 1373, 1378, 1383. On the downside, we've got I've got 1356, 1354 half, 1346, 1342. The 20-day comes in at 1340, 1336, and 1332. So this is Mike Vacchi, Princetontrader from Mr. Topstep. Everybody have a fantastic day. Use stops, be hedged, be careful in here. The volatility is going to start coming back into this market. I don't think in a huge way, but it's definitely going to pick up. So trade them well. I'll see everybody tomorrow morning with another webcast.